Stop! Before you invest your hard-earned money in 2025, listen to this. These 5 investments might look attractive, but they could destroy your wealth. Many investors will lose thousands this year because of these mistakes. And I don't want you to be one of them. Stay with me till the end. Number 4, even fools experienced investors. Hey everyone, welcome back to the channel. If you're new here, I'm Happy Mix, and I help people make smarter financial decisions and build long-term wealth. Today we're exposing the 5 worst investments in 2025. Some may surprise you. Hit like and subscribe so you don't miss future tips. Let's jump in. 1. Meme stocks and hype-driven plays. Remember GameStop and AMC? People turned small bets into big wins. But most lost money when the hype popped. They shoot up fast and crash faster. Built on buzz, not fundamentals. Unless you're day trading and glued to screens, you'll likely lose money. Instead, stick to companies with real earnings, strong fundamentals, and long-term potential. If it's trending on TikTok, it's probably already too late. 2. Low-yield savings accounts and CDs. Banks advertise high yield at 1.4%. But if inflation is higher than your rate, you're losing purchasing power every day. That safe account is actually a guaranteed long-term loss unless it's emergency cash. Instead, consider Treasury bonds, high-yield ETFs, or dividend stocks for real returns. Your bank isn't helping you, they're making money off you. 3. Timeshares and vacation club deals, glossy resorts, own this for life sales pitches, high upfront costs, ongoing maintenance fees, and terrible resale value. Most timeshares drop to near zero resale value the moment you sign. If you want vacations, just book them. Don't lock your money in a liability. A timeshare isn't an investment. It's a monthly bill disguised as a dream. 4. Get-rich-quick crypto projects. Crypto isn't dead, but scam tokens are everywhere. Every month a new token promises to moon. Join now, get rich overnight. The truth? 99% of these coins will go to zero. If you invest in crypto, stick to major players and keep it small. 5% max of your portfolio. If it sounds like a lottery ticket, it's not an investment. It's a gamble. 5. High-fee mutual funds. Fees hide in the fine print. Management fee. 2% looks small, but it compounds against you. Over decades, those fees can cost you hundreds of thousands in lost growth. Mutual funds can sound safe, but the silent killer is fees. Go for low-cost index funds or ETFs. Keep fees under 0.2% and let compounding work for you. High fees are silent killers of wealth. Recap: 1. Meme stocks and hype. 2. Low-yield savings and CDs. 3. Timeshares. 4. Get-rich-quick crypto projects. 5. High-fee mutual funds. Avoid these traps. Focus on low-cost ETFs, dividend stocks, and long-term growth strategies. If this helped, smash that like button and subscribe. Tell me in the comments, which one did you almost fall for? I'll reply to as many as I can.